Hello and welcome to the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today, we're looking at a very interesting topic, the value of portfolio diversification to investors. There are benefits, there's value around diversifying portfolios, and investors need to know why it's important. And my guest to discuss this is Ifeoluwa Oladapo-Dixon. She's the Vice President, Fund Managers Association of Nigeria. It's great to have you on the program.
Thank you for having me on this program again.
Thank you very, very much for joining us via Zoom. But before we begin this conversation, let us give you some of the major market stories that happened last week. And the big one was the Securities and Exchange Commission issued guidelines for a fully digitized Nigerian capital market ecosystem. Under the new provisions, the SEC expects that market operators will have a functional website, mailing system, and invest in a secured market systems. This is in line in building a robust financial and capital market that serves the investors better. Let's go on now to our conversation. And once again, if you're joining us, it's the Market Review program. And today we're looking at the value of diversification of portfolio for investors. And my guest, of course, is Ifeoluwa Oladapo-Dixon. She's the Vice President of the Fund Managers Association of Nigeria. So first, let's ask you to give us a brief insight into the concept of diversification in the financial and capital markets, because sometimes these words can sound very high for retail investors to even understand and relate with.
Thank you once again for this program and for extending and fellowship to FMAN to come and discuss on diversification. In plain man's language, I would say, what is diversification? And we're all familiar with this phrase or statement, don't put all your eggs in one basket, meaning, have different options. We've heard about having option B, even as a citizen now. And so that is what diversification is all about. But bringing it into the investment industry or world, I would say it's a technique that reduces risk by allocating investment across various financial instruments, across securities, across sectors, and the likes. Right? And it aims to maximize returns by investing in different areas that would each react differently to the same events. And so pretty much diversification is really about risk management. And it is based on the belief that holding different types of investment would yield higher returns. And in turn, it should reduce risk for such a portfolio than any one investment within the portfolio would have done. Yeah. And so essentially, that is what diversification, right, speaks to, having different financial instruments in one portfolio.
I like the fact that you started by saying that you cannot put all your eggs in one basket, and then you went into risk management and the fact that you need varieties, because this is how you can create value. It's very important. I mean, in 2008, the financial and global capital market crisis that hit Nigeria too, retail investors was hit. Of course, this is something that should be explored again, the opportunity to diversify portfolio. But why is it important now for all the classes of investors, whether it's the high net worth individual, the institutional investor, or the retail investors, who are the particular ones that we need to get back on board, considering their participation level in the market today?
Thank you for that question, because, this particular question cuts across various types of investors, like you've mentioned, high net worth, retail, and institutional. And the diversification is important for any class of investor, any class, right? You can't say because you're high net worth, you are immune from systemic risk or even non-systemic risk. You're not. And so diversification is key. And like I said, it's all about risk management and the belief that different types of investments would yield higher returns and it will lower the risk of a portfolio. And so for me, it's regardless of the kind of investor you are, it is always advisable and good to diversify. It is not enough to look at the expected risk and return of one stock. Rather, by investing in more than one security, an investor can reap the benefits of diversification. And top of that benefit, really, I keep stressing it, is the reduction in riskiness of portfolio, right? Like you mentioned, the 2008 issue, when we had meltdown, global meltdown, people actually suffered. But those that had their portfolio diversified, not that they were immune completely, but at least there was a reduction. Hence, I'm not saying diversification would eradicate risk, but it will minimize it. I think that is key. And so there is no doubt about when it is done appropriately or when it is meant to be done. Diversification offers a lot of benefits to an investor. And I keep saying you've actually broken the classes of investor, high net worth, institutional, and retail. And so I would even take it a step further to say, outside of you being HNI, institutional, or retail, right? Let's look at investors with their investment horizon and bucket them. So we have investors that would be short, mid, or long-term investors. And the question would then be, so why do a short-term investor need to diversify? They need to diversify. Again, it's not about the tenor it's not about the investment horizon that determines when you should diversify your portfolio. So for short-term investors, their focus is really on money market instruments. And these are debt instruments or investments that have less than 1 year to maturity, like we know. An example would be treasury bills, would be commercial papers, bankers' acceptances, and also fixed deposit, and in this category. And you're asking, can I still diversify? Yes, it is possible. And to diversify, even if you're a short-term investor. And the easiest way, I would say, really is a mutual fund. We have SEC-registered mutual funds. There are money market funds. These particular funds have been properly diversified. They hold different money market instruments in the fund. And so an investor, a short-term investor, can achieve that by investing in a money market mutual fund. He has been well diversified, I would say that. Compared to you just buying a commercial paper that can go bust. If you invest in a money market fund from a SEC-registered firm, a fund manager, you are covered. And so the risk of you being exposed to one issuer has been minimized by investing in such a fund. The next one will be the mid-term investors. To achieve diversification, I would say, mid-term would be, we tend to term it between 3 to 5 years, right? Or 1 to 5 years, because short term is really below 1. And then I would say a balanced fund would help in achieving that, because this balanced fund has been well diversified. They have a money market, they hold fixed income bonds, they hold equities in appropriate allocations. I think for a balanced fund, you can have like 40 to 60 in equities and the likes like that. And so again, an investor has been diversified by just, having exposure to a balanced fund. And for the long-term investors, I think for me, that's where it's a bit interesting. It's quite interesting and dicey, because you can then have a whole array of different instruments outside of mutual funds into your portfolio. And so we're looking at public equities, we're looking at private equities as well, investing in private companies, we're looking at you investing in bonds, in alternative investments outside these are traditional asset classes of bonds, fixed income, money market. Now people are moving into commodities, people are moving into properties, real estate. Commodities could be agri, could be gold, could be, iron ore. could be coal. We've seen people moving into that. And so that, in a way, again, for long-term investors, is a well-diversified portfolios when you have all these different asset classes or securities in your portfolio. And the whole essence, like I keep hammering on, is to minimize. And because you're not investing in instruments that are positively correlated, that is key. You need to look at that as well, so that the way this particular asset class would behave in these particular events that may occur is not the same way that another asset class. So when equity is up, what is fixed income? How is fixed income reacting? How is commodity reacting at this moment in this particular period that we are in? I think commodity is just a no-brainer due to all that is going on globally. People that have a slice of commodity in their portfolios, they're smiling to the bank at the moment. And so diversification for me is so important, and it is critical, rather than someone just putting money in equities or in fixed income. You need to spread it across different asset classes.
Thank you very much. That explains how it enables the investor to mitigate the risk, because you said, despite the fact that there may be crisis, but the risk will be reduced. And that's very important for an investor. So good for investors that are hearing that indeed it's good to diversify our portfolio, so that it can enable us to do better in terms of the risk provisions and all that. And quite interesting what's happening from that end. But in terms of just basics now, okay, let's go and look at the basics. How can an investor diversify his or her portfolio? And follow up to that is, what are the opportunities for young investors, especially the millennials? Because as of last year, the analysis showed that the average investor in the Nigerian capital market is 53 years. That's not a market for the future. You need a market that embraces the young band. Of course, you know very well that the young people are looking at other markets outside the capital market ecosystem. So how do we woo them to this very interesting portfolio diversification?
Even so diversification really is not just for the millennials, right? Even like you said, where they are looking into, even the generation before them are looking into that space as well, just for returns purpose. But the key of all the benefits really is to minimize portfolio risk. So some people, where they're looking into now, we can have a slice of that, have a slice of a traditional asset class, have a slice of alternative investments, have a slice of currencies, be it crypto, whatever they are actively investing in at the moment. When you have everything like that, a bit of these and all together into your portfolio, you've minimized your portfolio risk. They're doing crypto today. Today, Bitcoin is doing this rate, and the next day you are looking at it, it has dropped by 50% or 30%, whatever. Somebody can have an heart attack. Yes. But if you're well diversified, your portfolio would not drop that. The impact of the drop won't be that massive. You won't have a total 30 because another asset class will support it. And so that is the whole essence of minimizing portfolio risk, like I've mentioned. And it's not just to millennials, it's for any type of investor. Another opportunity or benefit that comes to my mind is greater opportunity for wealth maximization. And by investing in different asset classes, this creates the possibility for an investor to earn risk-adjusted returns through multiple income-generating streams. And these would have been possible with an investment. It wouldn't have been possible with an investment in just one asset class, like the example I've given. So commodity at this moment is, doing fantastically well, whether anything, gold, agri, people doing maize, people doing soybeans, or whatever. I'm not expert in that field, but if you look at the trend of things in the commodity space, it's been great compared to fixed income or equities. And so, it creates opportunity for wealth maximization. Another one that comes to my mind now is protection. Protection diversification helps to safeguard an investor against adverse market cycles. we've seen different cycles. They will tell you, I may be wrong, but equity has like a 10-year cycle. And so do you want to wait for that 10-year? And so it safeguards an investor against adverse market cycles. It reduces volatility as well. It reduces volatility. What again comes to my mind with volatility is 2020, when COVID happened, right? The fixed income, we saw how the fixed income reacted and how equity reacted and the gains we saw in the equity market, right? And so if you have a well-diversified portfolio, it's going to reduce that volatility, like I explained earlier as well, that, not that you are immune totally from any risk, but it's just going to reduce it. And the impact on any drop in any asset class will be minimized or reduced. And that is what volatility speaks to about. And so it gives your portfolio a sort of stability in terms of return. Not that today you will say 30% and tomorrow you are negative 10. That actually can cause health issues for those that look at their portfolios on a regular basis. And so the importance of benefits of diversification cannot be, we just have to emphasize it. It can't be overemphasized because it has loads of benefits to an investor.
And lastly, in terms of investor education awareness, I know that this is part of this conversation. In 30 seconds, how is FMAN continue to create that awareness on the need for diversified portfolio?
So for us at FMAN, right, one of our core really is to deepen our market, and that's why you've heard me touched on mutual funds. That is a way, CIS is a way to diversify your portfolio. So even if you're retail and you're saying, I don't have much, a mutual fund is just a good way for you to diversify your portfolio, because it all depends on how much you have. You can't buy bonds or have a bond portfolio, but if you have a bond fund holdings, you can be rest assured that a particular fund has been diversified and you're good to go. And so for us we'll keep educating investors through a medium like this. We do radio presentations as well. We do webinars as well, just to make people to understand the whole essence of investing, and also not just investing blindly, but diversifying your portfolio and speaking to professionals. And so, for us, we'll just tell you, because we have scammers as well within the industry. And so it's for an investor to approach FMAN or SEC websites and see SEC registered fund managers. And then with that, they can approach them and they will get professional advice. And so these are ways that FMAN is educating clients through webinars, through programs like these, radio presentations. We do flyers, we do events, we represent, and we even do collaborations with other capital market operators or group unions as well, just to deepen the market. And so, we won't stop, we'll continue. Any avenue, opportunity we have, would always sensitize the market about diversification and also the importance of investing.
Thank you very, very much, Ifeoluwa Oladapo-Dixon, the Vice President for Management Association of Nigeria. Thank you for telling us the benefits of diversified portfolio to investors. I mean, from wealth generation, wealth preservation, reducing volatility, and that natural saying that you can't keep all your eggs in one basket. It's very important that investors get to understand this better. In a time where Ponzi scheme is on the rise, just need to get the right people on board. So for Management Association of Nigeria, we really thank you for that, and also this opportunity to have this conversation. Thank you once again, Ifeoluwa, for this.
Thank you for having us.
Thank you.
Thank you.
Thank you. And that'll be all for this edition of the Market Review. And the conversation today was around the value of diversified portfolio to investors in the markets. It's very important that if you learned one or two things, or you want to ask questions or make a suggestion, you send your views or comments or questions to Abasiekong@proshare.co. Also, you can subscribe to our website, proshare.co, to read our latest news, articles, stories, and reports around the capital market, as we also continue to sensitize investors on the value of investing in the capital market ecosystem. As it is said, that's the only way you can make legitimate wealth, the capital market. Don't forget that you can also follow us on our social media platforms displayed on the screen. Thank you for being part of this show. Until we come your way again, have a nice day.